Good morning. Thank you very much for having me on. We have been making tweaks over the course of the last little while, but I think there is probably going to be some upside risk to the second quarter, just given what we saw the other day with retail sales. Obviously we all know this by now, but far stronger than expected. Yes, a lot of it was inflation, but at the same time, can you imagine if the number had been weaker? Everyone would have gone nuts. But overall, it shows, as we say over and over again, to never underestimate the American consumer. So yeah, I think we are seeing some potential upside risk to at least to the second quarter.
Jen, what did you make of Fed Chair Warsh yesterday and the statement, the press conference, and kind of how the Fed's shaking out here?
Where do I begin? The first thing I said was when the press statement, the media release landed on my desk, I was like, where's the rest of it? First thing I said was, I have seen longer BOJ statements, and those things are super short. So anyway, he's certainly putting his mark on the Fed on day one, starting with, slashing all the words, by a third on the media statement. During the press conference, I thought, he was smooth, he's a little witty. But at the end, I was thinking, did he really say anything? It was a lot of, sorry, with all due respect, of course, but I wasn't really 100% clear which way he was leading. I'm like, dovish or hawkish? But I think at the end, it was a lot of, there's a task force for that. And everyone, that's going to be like the phrase of the year, I guess, at this point. And maybe we're going to have to wait and to see how all these 5 task force, what they come up with by year end. But but if I had to be forced to lean in one direction, I would say he'd be leaning a little bit more hawkish than expected, just given all the comments about that, we're going to deliver on price stability and, Americans can't deal with all the higher rates and all that kind of stuff.
Our great fortune, folks, is every one of our guests is different, and we adore Jennifer Lee. And you just heard it. Bronze that. Did he say anything?
Exactly. So where do you think this Fed goes from here? Because I think Mr. Warsh did a pretty good job asserting some independence there for the Fed here. So how do you think they're going to kind of move over the remainder of this year?
It sounds like they're not going to do anything. I know markets are starting to, think about rate hikes before the end of the year, and certainly the fact that 9 policymakers actually are looking for high rates before the end of the year. But I think, again, a lot of this is going to come down to the data. And I think, by the way, it was a pretty good idea about the whole, leaning toward other sources of data. Like we've been saying this, for a while, ever since COVID, when all the response rates were coming down. You can't look at just one single report, such as the one from the BLS or, on payrolls. You got to look at a whole gamut of them to make sure they're all telling the right story. And certainly the private sector ones come up with some really interesting tidbits, like the ISMs, for example. China has their own ISM. They've got their official ISM. They've got the one from Rating Dog. So it's always good to look at a wide range, both official and private sector surveys. So I think that's a good thing. And overall, I thought he did a good job, just, deflecting some of the questions. But we're going to have to wait and see. And I think they're probably going to be on hold for the rest of the year.
To push against the optimism, futures up 64. Jennifer Lee, do we even surprise dampened, subdued inflation, flattish real GDP, where we get to a more quiet nominal GDP?
So the fact that inflation it probably looks like we have already peaked at this point. But again, and it's good news with that oil back down to like $78 or so right now. Gasoline's back below $4 a gallon in certain spots of the U.S. But at the same time, we are still above where we used to be, and inflation is still sticky. So I think that is one of the sticking points. Again, I'll take this for sure. Things are coming down faster, which is a good thing, and it's certainly good for the economy. But at the same time, we are still above where we once were, especially at the start of the year. Like we had $60 oil at the start of the year, and we're still $78. We're $78 now, so still above there.